My name is Flash Isaac, and I'm a teacher from the future. When I was much younger, I saw thousands and thousands of people fail Jamb and unable to gain admission. This made me travel in time. Now I am back with the Flashlearners Jamb app and a series on YouTube tagged 120 Days to Jamb. My mission is to help you blast Jamb and as well get justice for everyone who Jamb has served breakfast. You are welcome to episode number 45 of the 120 Days to Jamb Commerce with Flash Isaac. In this episode, we are still dealing with commercial banks. Now, the aspects of commercial banks we shall be dealing with in this episode are the types of bank accounts you can maintain with a commercial bank and the factors banks consider before giving out loan. Loan is simply taking money that doesn't belong to you. You want to start a business or there is something you need to fix, you don't have enough capital, enough funds. You can go to the bank to request that amount. They will give you to start the business. But they can't just give you like that. You don't just walk into a commercial bank and say, give me loan, and they give you. No. There are factors they consider before deeming that you are fit to take that particular loan. So these are the factors. But first, let's see the major types of accounts you can own with a commercial bank. The first is the savings account. Savings accounts are for low income earners. If you as a person currently preparing for Jamb, there is high chance that you are maintaining a savings account. If you open account without a valid document like international passport, driver's license, or voter's card, it is automatically a savings account or even business student account. There are different levels of savings account. There are ones you can open with NEPA bill, a valid means of identification. That one is stronger than the one for students. The one for students may not even be able to carry up to 200, 300,000 at once. They will have to flag it for you to upgrade. So savings accounts are basically for you to save money, small money, or receive small money. Now, if you own a savings account with some banks and you don't withdraw for like 2, 3, 4 months, they will be giving you small interest. Let's say you have 20, 30,000. At the end of the month, they can give you small interest, maybe like 1 naira, 0.5 naira, 2 naira, 0.003 naira, and they remove it from SMS charges. So that is savings account for you. Now, current account is for higher income earner or business persons. Current account can come in different forms. If you are opening current account for foreign currency, for dollars, for pounds, for euro, it is called domiciliary account because your normal naira savings account in Nigeria cannot carry dollar as dollar. Those days, if someone sends dollar to your naira account, the bank will convert it to naira and send to you. But these days, if anyone sends you dollar, the bank will automatically create a dollar account for you if you already don't have, or you must have a dollar account, which is called, or pound account, or euro account, whatever, which is called domiciliary account. You can also call it DOM account in short. So DOM account is account made for forex, foreign exchange, or foreign transaction. If you have a DOM account, you can apply for dollar MasterCard. I think I have one here. Where is that? You have this is my dollar card with GT Bank. Don't worry, you can't see all the numbers. You can't hack my account. So with dollar account, you can pay online in dollars, or you can even withdraw dollars if you go outside the country. And if you are using a Naira account, Visa or MasterCard, the federal government usually have limits to how much you can pay with that card. Sometimes $20 in a month, $50 in a month, $100 in a month. So that limit is there. But with your dollar account in a DOM account, you can make payment directly using your dollar MasterCard with no anyhow limit. Now, that is domiciliary account is also a current account. Then business account is a current account I mentioned earlier. Like my business account is Flashlearners. So if you're opening a business account, you need to have your business registered with CAC, called Corporate Affairs Commission. They are in charge of business registration in the country. Now, the procedure for opening savings account is different from current, because for current account, you need referees, people to sign for you that you're opening this account. You need valid documents like passport, voters card, any of those high documents. Then you need a NEPA bill, then forms to fill, then you need to be more than 18 or so. So there are more requirements to open current account than to open savings account. Current account gives you more liberty to have a lot of money sent to your account without anybody questioning you. And business account further helps you to get more funds. Normal current account is the one you open with your own name, while business current account is the one you open with your business name. And your business need to be registered, and you need to have a tax identification number, TIN, from Board of Internal Revenue. Then fixed deposit account is a type of account that you put your money and you tell them that I'll get this money after 1 year or 2 years or 6 months, and they will tell you, okay, if you're actually keeping this money for this amount of time, as you are withdrawing it, this is how much we'll add for you. Fixed deposit usually attract more interest than all these form of accounts. And for current account, there are more charges you get per maintenance, card maintenance, SMS charges, and the rest. So they just keep removing money from your small charges for anything you do, because they feel you are doing business, you have money. Unlike savings, where it is easy to maintain and small deduction, they can even give you small thing on top for keeping money with them. So before you're able to get loan from commercial banks, your account type matters. Whether are you using savings or current, do you have a business? So they have to consider all those factors and the amount involved. If you are having savings accounts and the highest that have entered your account is 10,000 naira, then you go to the bank, I need 5 million naira loan. They will look at you. No. You are not qualified for that. So the amount involved determines if you will get loan. And the period of repayment, you can't tell them I'm taking this loan, I'll pay back in 50 years time. No. So the amount, the time you wish to pay back is what they will consider. Okay, should we give this person? And how much you are earning determines how much loan they will give you. The government policy about loans, source of payment, how are you paying back? And for many persons with salary accounts, they easily get loans, because those persons, they receive salary every month and it enters their account every month. So it is easy for you to give them loan, because you'll be taking them from their salary. And the reason banks don't give people loan these days is people default, they take loan, they run. That's why you need collateral security. Collateral is something you give in place of loan. If you are going to the bank to take loan of 5 million naira, they need to check whether you have property or someone close to you has property worth around that amount that will stand in case you run. So you need guarantors, collateral that they will take in case you don't pay that loan. And the purpose of taking the loan. All these are factors commercial banks consider before granting your loan request. So that is it for this episode, and I sincerely hope you found the class interesting. Feel free to share your thoughts using the comment box, and don't fail to visit flashlearners.com to install the Flashlearners Jamb application if you've not installed yet. There you will see more questions related to this topic. You begin to play and answer questions. You see various versions there, or you visit your various app and Play Store to install the application. See you in the next episode.